Knights, go. Go Knights, go. How you guys doing? Welcome back to Sin City Crypto. My name is David. I'll be one of your co-hosts. Welcome to our FOMC special show where we'll be discussing the FOMC. Breaking news, the Fed has officially paused rate hikes. We're going to talk about what does that mean for the markets. We're also going to catch Jerome Powell's speech live today, so stay tuned for that. Among other things in crypto news, we have a special guest, Miss Jessica Haley, joining us in about 30 minutes. And also, the Golden Knights won. But first, another winner, because he is co-hosting the show with me, is Robin.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take all that old, boring, and stale information and repackage it up in a fun and sexy way. Also, I don't know if you realize it, but we are based in Las Vegas, Nevada, the home of the Stanley Cup champions, the Vegas Golden Knights. Man, we were at the game last night, and, you know, what a celebration, you know.
Sick game.
Yeah. If you're new to Vegas, like let's just say you moved here like last year, you just kind of visited, just know that we had no sports teams for the history of the city up until 6 years ago. And there was this negative vibe in bringing, you know, there's just like a no way, can't get any teams here in Vegas because, well, we have gambling. And then the Golden Knights broke those barriers down. And before that, there was always a lot of buzz. Hey, we're going to get a team. Hey, we're going to get a team. And then we always got let down. There's always the same excuse. Nope, you do gambling. Sorry, can't do that. Not in the best interest of the sport. So the Knights were the first one. And so we were really excited to have them. And they did pretty well the first year. Almost won the thing. But anyways, just so y'all know, this ain't no transplant team that came here. Yeah. Big Raiders fan through and through. But, you know, the Knights, that's my baby, you know. That's my boy. And they won. And no rate hike either. Yeah.
So,
what's Bitcoin doing?
Here's interesting. Okay, Jerome Powell hasn't spoken yet. Fed holds off on rate hike, but says 2 more are coming later this year. And you can see on the top there in red, the Dow drops 200 points as the Fed says what I just told you. You know, the Fed has never, the last 15 months, you know, started the rate hike. They haven't come out and said, we're going to hike 1 more time, 2 more times. We're going to hike 75. It's always been like we're going to wait for the data to come in. Why the change in narrative now? Oh, weird.
Yeah, you know, historically, when they're changing rates, they to combat out of control inflation. Historically, there's always been a rebound in the inflation, right? And so you raise interest rates. Inflation comes down, and then everyone celebrates. You let off the gas, and then boom, you get a rebound in the inflation. And so maybe that's what's going on. I mean, what do you think? You think that has something to do with it?
But why break trend and come out and say we're going to hike 2 more times this year?
That's concerning me. Like I don't get it. But here's the thing: the CME has been forecasting another rate hike anyways, and you don't need to, you know, if you look here, so if you go all the way out to the end of the year, you'll see that there is 30% chance we're up. But yeah, they weren't predicting 2 though. That's the crazy thing, because you can look at next month. So next month will be July 20, or the next meeting will be July 26, and on here we go, July 26, they're predicting a rate hike here, more probable. And so I was going to talk about this. I was going to say, hey guys, calm down. It's funny because I was going to be like, hey, calm down, because you're going to probably still get a rate hike even though we had a pause. That was going to be my narrative. I thought I was going to be like the black sheep here and be like, you think we're just going to keep cutting or pausing? And I was like, my narrative, I was coming into the show was going to be like, hey, I think they're going to raise hikes. I think they're going to hike rates again. And then you just came in and was like, Powell said he's going to raise hikes twice more, or hike rates twice more. So
now instead of being the black sheep, you are just a regular white sheep.
Bah.
So we are going to be covering Jerome Powell's press conference live. That starts in about 23 minutes. But I want to start here. What was intriguing to me was we're going to talk a little. Let the chat fill up a little bit. You know the Stanley Cup has a Twitter handle? Yeah, like the actual trophy. Yeah, never knew that.
You think we can get them to visit the studio?
Well, they got to go in and register to the SEC. Interesting cappuccino prices per country. Denmark leads the way, $5, and I was like, "Where is Italy in this? They better be pretty down." They are only $1.63 in Italy. So they're doing something right over there.
Is Portugal even on this list? I doubt they are.
Portugal is on the list. I think I saw that.
No, I doubt it. I will say.
Why, you guys don't drink cappuccino?
No. Actually, we don't. We only drink espressos. But the espresso in Portugal is stupid cheap. Like the last time I went, I think it was 25 cents, 20 cents for. Even if you took dollars and converted it, it's probably like 15 to 20 cents for an espresso. And if you're to take an inflation and just price increases, it can't be over $1 for an espresso still. Like that's, I'm telling you, Portugal's got world's best espressos and they're cheap. Kind of like me.
Well, you are cheap, actually.
That's right.
We have leaked footage of Binance propping up the price of BNB. This is quite interesting. There's a technique I have not yet seen, but that does look like someone who definitely works at Binance. That liquidation point of $220, that was kind of interesting.
I was on a side note with Binance or with BNB, and I was looking at some charts because I was like, man, it's holding pretty strong. Right? The price. And if you look at it, here, I'll take a quick peek here. If you look at Binance coin, so it's $244, right? But if you look at the all-time chart for this, it hasn't even sold off as much as Bitcoin.
Right.
It's outperformed.
We know why.
We outperformed Bitcoin, and it hasn't even had a real bear market.
We know why. Binance controls the majority of the token.
Yeah, and this is not representative of retail buying and selling. I never really realized it until I was like, what was the top of
BNB?
A BNB, and it was $5, not even $600, or tippy tip was over 600, but essentially $500. So it's only down 50% really from its all-time highs. If you take away this one peak here for 2 weeks. And if you compare that to the next biggest exchange coin, which I think is Kronos, take a look at what
it might be.
Look at now. This I think trades more representative as an open market, and this is what the rest of the ecosystem looks like when there's natural trading going on. And this is far, far away from what BNB looks like. And so their books are fake.
You know what's not fake?
That's it. They're fake.
You know what's not fake, Robin?
And who owns CoinMarketCap? The website I was just looking at.
Binance. You know who's not fake, though?
Who's that?
Not fake is our channel sponsor, Cam's Blue Wire Technology. Today's show is brought to you by them. If you are running a business and you are having networking issues, or you just don't want to worry about stuff like that so you can focus on making money, you want to call Cam's Blue Wire Tech or visit bluewiretech.com, or simply click the link in the description of this video. today's show is brought to you by them. So thank you to our sponsor. So let's take a look at what the crypto markets are doing. Bitcoin kind of holding strong here, 25.9. I do have the Bitcoin 5-minute chart here. We saw kind of looks like one of those swords where it's got sharp end on each side. What is that called? Sharp-ended sword. Yeah. So we saw
the
kind of
sharp-ended sword. Yeah. Like, do you have a dull sword at home? I'm just curious. Like, is that a thing?
But you know what I'm talking about? Like the ones that you hold them and they got the sticky end on the sharp end on both sides. What is that called, DJ? You're smart. You're smarter than I am, bro. Double-ended dagger. I like that. Yeah. My man, DJ.
Yeah.
Yeah.
Cool.
Yeah. But we are recovering. This is the 5-minute chart on Bitcoin. It's a little bit of a sell-off, but I don't really call it a sell-off. Of course, that's the 1-minute chart. Take a look at the price. We're coming in at $25,872, down just 0.25% over the last 1 hour. Pretty much even on the 24-hour. ETH still holding above $1,700. As Robin mentioned, BNB token $245. XRP back down to 50 cents flat. Saw a little bit of a rally to 56 cents when the Hinman emails were released, and then just came right back down. So what does that tell me is people are still looking to take profit. Maybe they just bought in at 52 cents and want to take a 4-cent profit. Cardano coming in at 27 cents. This thing has taken an absolute beating ever since the SEC's complaint against Binance and Coinbase. And then we had Robinhood essentially delisting Cardano, Solana, Polygon Matic. And those three, by no coincidence, were the 3 largest coins as far as decline. Doge, Tron is in the top 10, and Polygon Matic back in, which means Solana is out. The hell was that?
That was our celebration.
Wait, what?
What was that? I was pulling up a here. Without further ado, these are your boys here last night.
You just can't help yourself.
Look at this. We were out there in full spirit. Man, what a game. We couldn't afford the good seats because we got less than
those seats are still $1,500.
Yes, each. Yeah, man, what a blast. That was a good time.
So, although we might not be winning in the crypto space when it comes to regulation, at least the Vegas Golden Knights are winning. That's always positive. And then the crypto bubbles, just take a look at what the rest of the altcoin market is doing. You have Trust Wallet token, which guess what, guys? Trust Wallet is also owned by Binance. That token is up 14.3%. Okay, we're kind of sitting here laughing, but CoinMarketCap, Trust Wallet, like, is Binance kind of a monopoly? Right? You're getting your data from a Binance-owned company. One of the largest decentralized wallets, hot wallets, is owned by Binance, which means that token is also controlled by Binance, the TWT token. And you have the largest exchange with their own coin, also controlled by Binance. And we know Binance is in the crosshairs of not only the SEC, but the Department of Justice here in the U.S. as well.
Here's the thing. You control the narrative, you control the media, control the game, right? That's it's no coincidence. It's not like they want to own CoinMarketCap because it's a cool website. They know it's the go-to website that all crypto people go to look at price information. And there's also trending tokens up there. You can coerce prices and analytics on there. They got the API plugins that are found everywhere. Just saying, man. You control the information. You control the world, bro. That's it. We saw the power of YouTube and Twitter when it came to the elections.
He's kind of saying it in a funny tone, but
it's real. Like I'm saying it in a funny tone because it's funny that's where we're at now. Well, you know what? Actually, it's not where we're at right now. We've always been like that. But in the past, you controlled mainstream media, or countries and companies would control mainstream media to give the world its narrative and guide people and sheep into whatever direction they wanted to put you into. So there you
go. Let's shift to macro here a little bit. So I do want to share a couple charts. So the first one this is the inflation rate, headline inflation. Of course, CPI 4%. You see, we've been on a solid downtrend since we capped out in June of last year. So 1 year ago, we're at 9.1. Now we're at 4%. I remember Rob and I were having a discussion, and he said we would be under 2% because of how high last June was. And Rob, obviously, we're not under 2%. What happened, man? I thought you were Rob Stradamus there for a second.
Yeah, it's not only were we.
You were wrong, Stradamus.
Not only were we, was my 2% call, we came in over. Like, I beat it by double, bro.
You're such an idiot.
I'm just saying, like I said 2, it came in 4. Like,
wow.
I mean,
Good job,
boy,
man.
on something here,
Round
right?
of applause. Round of applause.
And also let's not forget if you're new here, say hello so we could drop an Ola back at you.
Overachiever, you.
And we got Y spelled WHY, Sabin Constantine. We also got 4-5 Stefan Mallet, OCX writer. You've been there before. The R factor as well. And so to all of you, hola! Welcome to Sin City Crypto.
Did you say Y spelled WHY, which is how it's actually spelled?
As opposed to just the letter Y, thank you.
Guys, another round of applause for Robin, please. He knows how to spell. He just won the Sin City Crypto Spelling Bee. First ever.
If I said brought to you by B, that could be B-E. It could be the letter B. I'm just saying, man.
Fair enough.
Okay.
That's all, I just want to give you your proper...
Thank you. Appreciate it.
My pleasure.
Gracias.
Okay, so...
So, 2%, right?
Yeah. Wait, what? 4%. But another important factor or inflation number came in. That was the producer price index, the PPI. So this is more of a measure of what we're paying for real goods, I would say, because this is what the producers are paying to manufacture and how much they're spending. And of course, that cost gets pushed down to the consumer, which is us. And that has been on a steady decline as well, coming in at 1.1%. That is annual, year over year, month to month. Moving on to services inflation. You hear the Fed talk about this a lot. Services inflation relates to services like restaurant, like travel, right? Leisure, going to Universal Studios, Disney. That is taking the biggest, what's the word I'm looking for? The biggest decrease. Biggest decrease since July of last year. So almost over a year. So that is coming in at 6.3%. That is year over year from May to May. So that is something, again, the Fed is looking at. We also have energy inflation. This has been on the downtrend for 3 consecutive months. Now, this does encompass stuff like gasoline and oil. So you might say, well, I'm still paying more money in gas. Well, you weren't paying as much as you were a year ago this time, which is how these things are measured. So for me, I'm looking at all these inflation numbers are looking pretty positive, right? If I'm Jerome Powell and I'm sitting there, I'm like, all right, we've hiked rates for 10 consecutive meetings. Now we pause it. Everything is starting to trend down. Why would I all of a sudden come out and say we're going to hike 2 more times? Robin, do you think
I know what it was. I figured it out.
Oh, God, here we go.
No, this is a real take here. Okay. So they knew. Okay, so what was the purpose of raising interest rates?
To quell demand.
Yes. Slow down the
money out of
markets.
the market.
Slow down the markets, right? Slow down the markets. What happens when you've raised interest rates 10 times in a row? You start to slow down the markets. What happens when after 10 straight rate hikes, you decide to take a pause? What happens to the markets?
They might rally.
There it is. And so if you know you're going to pause the markets and you're going to pause interest rate hikes and the effect of that is the markets would rally, which is the exact opposite of what you want to happen, then you got to come in with we're going to pause, but hey, we will be raising some more. So that way, what happens to the markets? They don't rally and you still are completing your objective, right?
Yeah. I mean, I would just assume, I would assume he would wait till his press conference, but there's a 30-minute window where it's announced, and if you don't say anything, the markets could rally. So I guess in a way he came out and the markets were kind of waiting, right? Markets are flat. They're like, all right.
Your kid's like punished, right? They did something really bad. What happens when they're off punishment? You don't just like go take them to Disneyland, right? No. Like, you're like, all right, you can go outside. I'm watching you though. I'm watching you. You get what I'm saying?
Man, you
don't take them off of punishment, and then go take them to Disneyland. That's all I'm saying, bro.
Robin, you got some. Unless you already paid for Disneyland. And
his ass don't go. Be like, hey, I'm gonna bring you back some Mickey ears. I'm gonna bring you back some Mickey ears, and that's it, bro.
About the ticket, he's going.
Not me.
Okay. You're gonna take
be on best behavior. Otherwise, no Disneyland.
That's a good analogy, though. I'll give you that. Let's take a look at what's happening to housing. So rent inflation was steadily ticking up for a year.
Hold on, you know what's not ticking up? Is the like button. Yeah. Why the hell have you not hit the like button? I just realized we're at like 20-something% like ratio here, man. I need to call in an interest rate hike on why aren't you interested in hitting the like button? What the hell is wrong with y'all?
DJ's dying over there. I'm calling interest rate. Okay. So rent inflation. Rent inflation. That has been ticking down since we hit a top at 8.2%. Now it's down to a whole 8%. So no big moves up or down, but at least we're on the down and down, not the up and up, but the down and down. But something that I'm kind of looking at as well, which could this potentially have something to do? Total housing inventory is up. What does that mean? That means there's more houses available on the market. So if we take the basic law of economics and what it stands for, supply and demand, when demand remains the same and supply goes up, well, guess what? Prices go down. They're inversely correlated. So demand is either going down or staying the same, right? Demand's not going up, but the inventory, the supply is going up. So now there's more housing available, which means that these landlords aren't able to just be like, yep, we're raising your rent 45% from last year. If you don't like it, you can move out. And they can say that with confidence because they know they got 20 other applications on the back and they can just bring another renter right in. Well, that's not happening anymore, right? So what does that mean? Do you buy into that notion, Robin, that these could be potentially related? We see housing inventory go up and we see inflation of the rent go down.
It's a renter's market right now. And this is what happens when the housing market cools down, right? So if you bought a house with 2.5% interest rate or mortgage, with your mortgage rate, 3%, 3.5%, and you can cover your mortgage note with renting. So right now it's a renter's market. My concern is that if somebody is renting their house, they have several properties, they are looking like this is a good business. What happens if they start renting more homes and they can't find renters for that? I don't know. I don't really do houses, but I'm just kind of evaluating the market.
Yeah. It's interesting to see because, obviously when you talk about people, right? Think about you, the average person. What is your biggest monthly liability? It is either your mortgage or your rent or your housing, where you live, shelter. The next is usually groceries. And so those are the two things that are kind of the Fed looks at as far as headline and core CPI. Obviously, core is minus food and housing.
Do you think we're in some housing bubble?
I don't think we're in a housing bubble. Do you know why? Because we saw a massive buying streak, right? The interest rates have been so low for years, and then it just got boosted up after COVID. That I think like it just wouldn't be worth it for people. They got such good rates.
Yeah.
It wouldn't be worth it for people to just let go because they're going to spend more money. Back in 2008, when you had these convertible rates and these adjustable rates, right? You had great, and then bam, year 3 rolls around and it's at 9% when you can just go get a new house for 5%.
I think the salary versus the cost of the mortgage is doable. So what we had back in 2008 were that homes were $250,000, $300,000, but yet the median salary was pretty low at that time. And so people are making more money now. They can pick up a $1,800 mortgage payment, when in the past with the last housing market bubble, the market just wasn't there yet, right? We hadn't even had the housing crash and then all the printing that came in afterwards. And so it was more realistic to survive now with an $1,800 mortgage versus it in 2008. And so I don't think that we're in a situation where people can't afford their houses, because that's what happened in 2008, was that people just couldn't afford their mortgage payments because they were getting approved. You know, people were making $3,000 a month and they had $1,800 mortgage. It's like mathematically it makes no sense. But the banks were like, we can't fail with this. And so they're just giving out mortgages to anybody and everybody. They're throwing them out like candy, literally, like beads at Mardi Gras.
I mean, we come from the service industry, and a majority of our income was tips. And I remember back then, I had a lot of friends. My dad had a lot of friends where they weren't even asking you to verify how much money you make on tips. They were just like, fill out this form. I make $5,000 a night in tips. You didn't have to prove anything. Just give you a loan. Now, when I bought my house in 2020. It was like, we need 3 months of consistent tip and compliance. And so I had to change the way I reported my tips. So it definitely got stricter. So they're not just giving out rates to anyone. And also the whole adjustable rate, it's not as common as it was back in 2008, right? Now they're doing something different. They're doing 40-year mortgages. They're letting you buy rates down more. And so that has changed a little bit. But as far as majority, it's fixed rate. It's changed, but commercial real estate, on the other hand, is a story for another day. That you have the whole AI thing. You had people working from home. When the lockdowns ended, people continued to work from home. The leases have gone up, especially in these metropolitan cities, Chicago, New York, San Francisco. Analysts alike are saying we're going to see a massive cascading effect of people just defaulting on their commercial real estate loans. And guess who those commercial real estate loans are made by? They're made by the banks. And so that is why a lot of people are saying the banking crisis isn't over, and I tend to agree with that. Another thing, and we got Jerome Powell coming on in about T-minus 1 minute, is the student loan debt. So we know the debt repayment has been halted since the lockdowns of coronavirus.
Back on now.
Well, I think 1 more month, 1 or 2 more months. I think August is the month I heard. But think about this, Robin. People have had that extra discretionary income from not having to pay their student loans.
Yeah,
now
myself included.
That's what I'm saying. Now that they got to go back and pay it,
they're supposed to cancel that debt.
Hold on. In an indirect way, you're kind of taking liquidity out of the market, yes?
Yeah, 100%.
So
if you went to school in the United States and you owe money, then now you got to pay up. But they were supposed to cancel that debt. You dangled the carrot in front of me. You got me excited, man.
You're one of those people, huh? You think
it's free money, man.
Free money.
Here's the thing: like, they shouldn't be giving out free money, but
someone's paying for it.
If you're gonna give it to me, I'm gonna take it.
Someone's paying for it,
right?
Tell you that. Right?
If I gave you $100 and I was like, "Here, take this,"
Jerome Powell is live. Let's go to JP.
Squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points, we have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a half percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right. So, more of the same. We're waiting on new data. We're waiting on this. We're waiting on that. And this inflation number is this. And that inflation number is that. And here's there and there's everywhere. And I don't know what the hell he said. All I know
He
is
sounded sad. Didn't he not sound sad?
he always sounds sad.
Sounded upset.
Someone said ChatGPT made that speech. Very interesting.
Stop it.
We do have a...
Maybe Jerome Powell is ChatGPT, but
No,
like, like a running version of him. Like robot.
absolutely not.
Like skin on top of robot.
Absolutely not. We do have a first-time guest joining us. Very special lady, Miss Jessica Haley, my friend DJ. Let's go ahead and bring her into the show. Jessica, how are you?
So great. How are you guys?
I'm good. Thank you so much for joining us. We heard you're a big Golden Knights fan, so what a better day to bring you on than a day after they win the Stanley Cup.
True. You guys are in my old stomping grounds. I just left Vegas a couple months ago. I was there for about a year and a half, and I absolutely loved it.
So why'd you leave?
I got recruited out here to build a business with Gareth and all the traders out here. And honestly, you guys, I'm not going to lie. Like, I have had 13 years of having no winter, and I had one and a half Vegas winters, and I was just unavailable for cold weather. I'll be back in the summer and the spring and the fall. Okay. And I'm just, 4:00, dark outside, not available. Not any longer.
I can't do that. I was born in Sweden. I lived in Sweden, and having those days in the winter where there's only like 4 hours of sunlight. I'm a kind of guy where weather affects my mood. So it's dark and gloomy, I'm very sad. If it's bright and sunshine and rainbows, I'm very happy. Jessica, you for those that don't know who you are, can you tell us a little bit about yourself?
Absolutely. So my background is in performance coaching. So I essentially have a degree in humans. I've worked with thousands and thousands and thousands of them, different industries. It started out in my early 20s with building a large sales team, and having to learn a lot of things at a very young age, very rapidly, and, international expansions and public speaking, and a lot of things came along with it. But that essentially gave me kind of the next step of saying, wow, like, this game of humans is my favorite thing. Like, I love understanding how we make decisions, how we take action, what drives us, how to grow and expand in new ways. So I kind of went down all of those different rabbit holes, and I jumped into the financial sector probably 3 months ago, and that was being recruited, for the performance side of things with high-level traders and a hedge fund, and now I'm doing some media stuff, co-hosting, big panel discussions with people from all financial sectors. And I'm really just diving into this space head first and learning so much in the process. So, my background is human.
Your Twitter Spaces is all the rave lately. We've joined you on your first two. We missed yesterday, and as we mentioned, we were at the Vegas Golden Knights game in arena celebrating.
Hey.
So we didn't make it to yesterday's, but we always look forward to joining you at your spaces. So the one you had yesterday got over 10,000.
They had over 1,800 people. This is one of the biggest spaces when it comes to crypto and markets.
And over 10,000 people listened in total. So big spaces. You got, obviously you got Gareth here, Grant and Gary Cardone, Brian Evans as well. So. And David Lynn, who's launched his own, former reporter for Kitco. He's launched his own channel now as well. So, just a badass space. We will be joining there as long as you bring us up. We'll be there every week, unless the Golden Knights are playing in the Stanley Cup Finals. But
which is not going to happen.
Yeah.
Now, Jessica, I wanted to ask you about yesterday's space. You had a lot of influential voices in there. What was the overall sentiment as far as what they expected the Fed to do? Obviously, we know the Fed paused rate hikes, but what was that experience like hearing these influential voices discuss, and what were some of your key takeaways, what they were expecting, and kind of what has happened today?
To be honest, they were kind of opposing. There was not a through line there. There was people that thought that we were going to go this direction, and there was people that thought we were going to go this direction. So it was actually really, really interesting hearing all of the different perspectives. There wasn't a lot of through lines, to be honest with you. And we started out the space talking a lot about real estate, and that was a very interesting conversation because again, some opposing views there as well. And then we went into the Binance and Coinbase SEC stuff. And there was some through lines there a little bit. There was definitely more bearish humans on in that conversation. And then we went into, a little bit of the Fed stuff, but I would definitely say there was a lot of people that were just really curious on what was going to happen. They didn't really know what was going to happen. And then, I saw you guys were just watching that right now. I jumped right from a call to hop on this. So I actually don't know what's going on right this very second. So you guys are probably going to have to fill me in a little bit.
So they paused the rate hikes. They paused the hikes, and Jerome Powell said more of the same. He says every single FOMC
But
press
this time around, he hinted that he's going to be raising interest rates, or that they're likely to raise interest rates in the future.
Twice more this year.
Yeah. So I know the CME had projected that they were going to pause/cut by the end of the year. That was the narrative just in the last couple of months. And now I think Jerome Powell just kind of doesn't want too much celebration in the markets, and he doesn't want a bunch of selling, a bunch of market rallies, because that's the whole point of the interest rate hikes, or to calm the markets. And so I think he's playing the long game here. I don't know.
Who knows?
Yeah. I want to say that I wanted to ask you about the Twitter Spaces as far as a platform, because we've seen the Tucker Carlson, he went from Fox News, launched his own brand on Twitter Spaces, wildly successful, getting over 30 million views on some of his latest episodes.
Just to clarify, it's not Twitter Spaces,
that's just the Twitter one, yeah. And it seems like there's going to be a shift from mainstream media to social media platforms. Twitter is leading the charge, and I know you have kind of you've started your own Twitter Spaces. What is your takeaway? What is kind of like the mission with the Twitter Spaces, with verified investing, and the direction that you guys are going with the social media?
So I was not really a big Twitter person whatsoever before, I don't know, probably like 3 or 4 months ago. And I had hopped on a couple Twitter Spaces over this past year, and I actually ran my own a few times, and they were very psychology based. So it was almost like I was kind of just doing living room chat with people that were having things go on in their world that they needed support on. So when I first got on my first space, I was like, this is a cool platform. Like, I really like how it feels so vulnerable almost. You know how when you're on like an Instagram live, nobody's going to come up on an Instagram live and pour their heart out on what's going wrong in their life and what they need to work through in front of a bunch of people. But Twitter Spaces, I was like, wow, this is interesting, because you can just hear the vulnerability coming out of people's voices because they don't have to be seen. So they can just kind of share in the comfort of their own space. And so I just, for fun, ran a couple of Twitter Spaces, and it was called Get in the Green Zone with Jess. And I just had them on a Wednesday evening, for an hour, and people could come ask me anything that they wanted. It was essentially free therapy. And it turned into this really cool, like every week it grew. And I did it for about, I would say, 4 to 6 weeks or so. And it was just really cool to see. It just became this like midweek spot, safe space that people could come to and share what they were. The first question I asked was, what are you celebrating? What are you growing through? And what are you creating in your life right now? And people would come and they'd be like, Jess, I can't wait to share, what I'm growing through this week, or reframing them a little bit into a space of what it is that they're not going through, but really growing through. I started to see people like wait for that space to express themselves on Wednesdays and come talk to me and just, have these little conversations. And again, like, I have no Twitter following. I don't post on Twitter. I just saw these spaces kind of being used, and I was like, this is kind of like Clubhouse, but like better. I don't know. I enjoyed it. So when I first started working with verified investing, I was like, okay, you guys, we should do Twitter Spaces. Like, this is what people are up to these days.
Great decision, by the way.
They're really,
yeah.
And well, I'm so grateful that I get to, leverage Gareth and his connections and the people that he has, because I've been able to really connect to some of the great minds that are in the financial world, and, reach out to those people and say, hey, would love to have you on a panel. But really, it's just deep down an opportunity for me to be immersed in this world so that I can learn it as fast as possible, and also build, my brand in the process as well. But Yeah, I think that anybody that's sleeping on Twitter Spaces right now is kind of missing the boat. I think it's a really, really great way. I mean, Gary Cardone, and Grant Cardone, I'm not going to be able to get those guys on a Zoom or on an in-person meeting or a consult call with, for less than however much money. But I was able to get, Gary, all I did was meet a guy at Bitcoin Miami, ended up reaching out to him and saying, hey, I see you in a picture with Gary. Are you able to connect me? Threw me in an email, invited him to a Twitter space. He came. Grant came the next day, or Grant came on that night, and then also came on that next week when I asked him, could you come back and talk more real estate? These guys this is such an informal space to just come add value and just share their knowledge and wisdom, that it's not this thing that has to be behind a paywall and it has to be this thing that's so, huge. It's just a conversation, and they pop in and they add value and they pop out. So,
100%.
And they also are taking advantage of the platform as well. And I've started to see how Grant's running a space every single day, and he's able to add value to his audience and the people in his world, and kind of leverage already being on different meetings, but just also broadcasting them through Twitter spaces at the same time, building his following on that as well. So I think it's a up and coming craze that I think people should jump on.
I 100% agree. And not just people sharing, you talked about how people are excited to come on and share their life stories, but just getting information out there. People's trust in mainstream media has been waning and is continuing to wane. And so when you have a platform like Twitter, like Robin mentioned, Tucker Carlson, within an hour, he had like 4 or 5 million views on Twitter.
And I'm glad you brought up Clubhouse as well. That thing was a lot of buzz in crypto before the Twitter spaces. And then Twitter just absolutely killed that business model. And maybe they cherry picked that idea from them. Maybe they had it working all along. But yeah, that was interesting.
Either way, we agree with you that it is definitely the future, and I think it's a positive. Kind of tying it back to our space, it's a positive because people that get their information from mainstream media, they have an agenda, right? And so when you have someone like Jessica Haley hosting a Twitter Spaces and bringing on influential voices, there is no they got paid by a certain donor or a pharmaceutical company to give out a headline. It's like people who are coming on, having a town hall style discussion and sharing their insight. And I think that does a great service to people. So we enjoy, we look forward to your spaces, not just speaking on them, but also listening to them. And so we really hope that you continue to do that. Also, for the people that are not following Jessica Haley on Twitter, please do yourselves a favor. It's at the Jessica Haley. It is on your screen now. Go follow her. They do their Twitter Spaces every single Tuesday. I believe it's at 7 p.m. Eastern, 4 p.m. Pacific Standard Time.
And to our viewers, make sure you go and watch or listen to these spaces. And next Tuesday, we'll be in there as well. Hopefully, you bring us up on stage as well.
We had a blast. It was fun. Rob likes to ramble a little more than I do, but it's a good yin and yang we got going on here.
Speaking of rambling, you are also from my hometown in Virginia, and I'm David knows where I'm going with this. So one of my biggest achievements was I was homecoming king at Granby High School.
Jessica, he has not let that go.
2002.
21 years, Jessica. You can't let it go.
I got a couple of accolades I hang my hat on. Early investor in Bitcoin, homecoming king, and nothing else really matters, honestly. So there you go.
That says a lot about
I'm flying back there on Friday.
Oh yeah,
right into Norfolk Airport. Right into Norfolk Airport. ORF, baby.
There it is.
Never been there, and can't imagine if Robin keeps talking about it, what that place is like if they made him homecoming king. Anyways,
it's a special place.
Jessica, we wanted to thank you. We know you're a busy lady. You're very in demand. So I wanted to thank you for taking some time out and joining us. Is there anything you want to leave us with? Any parting words?
Honestly, I'm just so grateful for you guys. It was so awesome meeting you guys in person, and I'm really looking forward to coming to visit Vegas again and having new friends there. It'll be really awesome. We'll definitely have you on the Twitter Spaces this coming week, and definitely anybody that's listening, please join us. We're going to continue to evolve the space, bring the best of the best minds in all financial sectors. We're going to add some education into the mix, some market psychology. I'm going to kind of veer into my world a little bit more with the psychology side soon. So it's going to continue to evolve and just be incredible. So definitely come and play and join, and we'd love to have you.
Amen to that. And when you are in Vegas, please let us know. We'd love to host you in studio and provide some hospitality. So yeah. And so Jessica, thank you again. Enjoy the rest of your day, and we'll see you next time. Take care.
Thank you so much. Talk to you guys soon.
All right, bye.
Pet Brett said that I break out my Letterman jacket on the weekends. I put on my ring. What are those called? What is it?
Class rings.
Class rings. Yes, I put on my class ring, and
I feel like you're the kind of guy that ordered a second one. You know. All right, so let's take a peek at the markets. Where are we? So Jerome Powell has been continuing to speak, and you can see markets are flat. So he hasn't really said anything, assuming by the markets, and we can take a look at the traditional market as well. Based off of what I'm seeing as far as the markets, we are down same amount, 250 points on the Dow. It actually came down a little bit. We were down 300. Now we're down 250. NASDAQ and S&P are flat. So obviously he hasn't said anything to spook the markets.
You want to check in with him and see what he's
yeah, we can check in with him.
Yeah, let's see what the newest narrative is.
I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were three issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about...
Says we're really focused on what to do in this meeting. So, what does that tell you about them announcing, hey, 2 more rate hikes? Was that kind of, they already knew that going in? Like, what changed in the data?
I'm telling you, he just wants to keep people on edge.
He wanted to suppress the excitement. Is that what you're saying?
Yes. 100%. Good choice of words there.
Suppression.
Yes.
Again, guys, I feel like from here on out, we have made our entire shows based around the FOMC in the past. But that's when things were they're very, very much fluid, right? Now we know inflation is on the down and down. I like that.
Inflation is on the down and down?
They say up and up. It's the opposite of up and up. It's the down and down. You leave my catchphrases alone. But it's more the same. We're waiting on this metric, core minus X housing, X services, plus this, minus that. And so, obviously, the Fed has a mission. The mission is to get inflation down to 2%. The mission is to quell market demand and quell excitement. That is why you ask yourself at just a common sense level, why would they go from not speaking on what they're going to do in the future for the last 15 months to all of a sudden now on the day that they pause the rate hikes for the first time in 15 months, do they say there's going to be 2 more? Ask yourself that question. Also, someone in the chat earlier said, if the markets aren't moving because of due to the pause, we're in for a little bit of trouble. I think August, I don't know, just over the next 3-4 months, we might go back down to 20K on Bitcoin. We got the student loan debt. People are going to start repaying that. So that takes discretionary income away from investing in things like cryptocurrency back into paying bills.
Biden is still out here saying he's going to get the student debt canceled still, or at least the portion that he promised. And he was talking about vetoing any bill that came on his that popped up on his desk, but they included the return of the payments in the debt ceiling restructuring, whatever that was called. And I'm still waiting, man. I got my student loans, man. Biden, what's up, man?
Hey,
you gonna cancel this thing or what?
Pay your student loans, bro. I paid my student loans. Speaking of paid, we have a paid sponsor of this channel, CAMS, Blue Wire Technologies. Today's show is brought to you by them. If you want more information on how they can help your business with your network issues, visit their website, bluewiretech.com. So big shout out to them. Also, big shout out to our special guest, Jessica Haley. Go follow her on Twitter. The link is posted in the chat, pinned to the top. Go support the guests that join our show. Also, go follow us on Twitter. We're on Instagram, TikTok, everywhere. You want to support the channel? There's links to that too. You want to do merch? There's links to that too. There's links to everything except links to a dictionary that Robin can read and pronounce people's names correctly.
They don't have names in a dictionary. You should know that. It's only...
My apologies.
That's right.
Now,
there are a couple of names, though, real quick before we sign off. Dano, 3 digits, and wrong again. Hola! Welcome, Sin City Crypto.
Wrong again, right again. Here comes the finger tornado again. I know I kind of threw you off there, DJ. My bad. Guys, thank you so much. Come back tomorrow. We'll have more crypto news for you. Thank you again on behalf of myself, Robin, and DJ. We love y'all. See you tomorrow. Peace.
Sin City Crypto. Everybody know what we here for. Entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in. For big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I split the game, but they gave it. Name the coin, it's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy a dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming hola till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting FOMO control ya.